4 years. So they're in this sort of race to the top, I guess you would call it, not a race to the bottom. But remember, they just have huge amounts of money. I mean, $1 billion for a few AI research scientists. In the grand scheme of things, for Meta, it's not that much considering how much they're spending on infrastructure and GPUs. Same with Altman. So they have the money to do so, but it'll be interesting to see how this all shapes
vamos
up.
a ver, ahorita en un momento vamos a empezar. Tengo que platicar con un cliente así en WhatsApp rápido. Voy a dejar las noticias mientras. Ese no, este sí.
Tech check. Right, coming up, Treasury Secretary Scott Bessent will join us. We'll discuss the big, beautiful bill likely to pass later today, the trade framework with Vietnam, and the fate of trade negotiations with others, including the EU, ahead of the deadline next week. Money Movers back in just a moment with the Treasury Secretary.
Tech Check is sponsored by Comcast Business, powering possibilities.
Bigger isn't always better. Smaller AI models can deliver the right results and help reduce AI costs up to 90%. The AI built for business, IBM.
We just signed the lease on our third shop. My assistant went to customink.com to get new uniforms with all the locations. He found great products, uploaded new art, and had boxes sent to all the shops. Custom Ink makes it so easy. Get started today at customink.com.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style?
Ya quedó. Ahorita nada más espero respuesta y para seguir trabajando. Bienvenidos al directo de hoy. Igual y lo edito y lo recorto. Están pasando varias cosas, tenemos varias, vean esto, o sea, tenemos certificaciones, autorizaciones, buenas noticias para el sector tecnológico y biotecnología. El IX, ahí va, se mantiene así. Tesla, vean, o sea, comprarlo otra vez en 312, 313 y aquí vamos, ahí. A largo plazo. Tenemos Wolf, también ha dejado un buen rendimiento viniendo desde acá. Gits, ahí esta sí se cayó, o sea, mal. BMNR, aquí va, 105, pero pues vean, o sea, desde ayer, a ver, desde ayer en $40 comprada, o sea, imagínense. Don't let me be misunderstood. Dun, 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 dun. ¿Qué tenemos? ¿Qué tenemos? Roku, 2%, 1%. Netflix, 1,298.
$85 cash secured put. And so by selling that put, you basically are getting paid about $5.50, but you essentially are taking an implied ownership of the stock if it does hit 85 or lower by expiration. But if you take that premium away from that $85, your break-even price, if you're assigned the shares at 85, is $79.50. And looking at the math, you're selling, in this case, that 85 put, which is around a 36 delta, implies a 64% probability of profits. And lastly, that premium of $5.50 relative to the strike is around $7 yield to strike price, 7%, forgive me, yield to strike price. So what that means is, if the stock holds the $85 or higher, yield to that strike price is around 7%, which is quite good in the next 43 days.
Okay, yeah, you make a great point. This is a holiday shortened trading day. We only have a little bit more than an hour left in the trading day. That's George Silva, Senior Markets Correspondent. Thank you, George. Coming up next, time for our 360 round. We'll bring in our panel to cover this morning's labor market data, how the Fed might interpret it moving forward. We've got insight next on Trading 360.
En fin, a ver.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some
Hay
investments
mucho
for me
trabajo,
too.
chicos.
Let's move on, shall we?
No can do.
I'll get out here.
Dejen pongo los índices. ¿Qué pasó? No, no lo quieres, eso lo generas desde la página. Ok. Abre tu app, inicia sesión. Área de código de 6 dígitos. En tu app selecciona el mensaje en letras azules. Cabrón. Sí quedó, a huevo. Necesito una cuenta sin límite de depósitos y ya quedó, chido. Estado de cuenta, información, seguridad, a ver, seguridad. Dispositivo autorizado. Historial. Puta. Bueno, pues ya lo intento después. Vamos acá. Aquí que tenemos, también tenemos BMNR o ya no. No, ya no. Bueno, cuestión de esperar. Genial. Wolf el primero y acá que tenemos day trades porque ya hay que utilizarlos. Desde... Ah, sí, cierto, todavía no. Okay. Tenemos 2, 4, 6, 8. Tenemos 8 disparos, genial. A ver. Y acá que tenemos, a ver. Miren esto. Dow Jones, Nasdaq, S&P 500, Russell 2000 y el VIX. La volatilidad cayendo. Eso es bueno, porque si la volatilidad cae, la bolsa va a subir, como ahorita lo estamos viendo. Ahora chequense esto, 6.282 puntos. O sea, sin broncas vamos a llegar al 6.300. Entonces podemos poner objetivo como 6.400 al S&P 500 a finales de septiembre. Si la situación sigue como va. No hay problemas con aranceles, no hay... no hay que guerras, conflictos bélicos, peleas con la tasa de interés, ese tipo de temas económicos, geopolíticos. Sin temas alcanzamos 6.400 en 3 meses. Pero está por verse. ¿Qué iba a hacer? Liquidez, compra BMNR. Listo. Hay que registrar todos los movimientos y estoy esperando, hay que vender una posición, pero todavía no me contestan. No, todavía no. Changos. Porque esa cosa se está cayendo y como el cliente no me contesta, pues a qué hora va a vender. ¿Qué más tenemos? ¿Qué más tenemos? Sit. Ah, sí. Adiós. De Stellauder sigue subiendo. O sea, ya es cuestión de tiempo para que llegue a los $90. ¿Qué más tenemos? Tesla, pues ahí va, miren, 317 otra vez, o sea, ahí se consolida poco a poco. Wolf ya se desgastó, ahí va. LQTX también, LXT, ahí va. Y estas son las que tenemos ahorita. En Face Energy igual les digo, a largo plazo $45 está bien, pero será cuestión de checarlo. Vamos a ver. Ok, va, no hay mucho de qué checar acá. Eh, Vamos a poner la solicitud, así claro.
Market share.
So you think that's what's happening? They're negotiating with their suppliers?
I think they're negotiating with their suppliers. I think many of the apparel companies, their margins became abnormally high during COVID. So maybe one thought is we'll see a normalization there.
What about other trade deals, Mr. Secretary? Because we're getting close to that July 9th deadline on Wednesday. Are we going to see more of these type of deals between now and then?
We are. Of course, everyone waits till the last minute. They think that they can get the best deal. And as I've warned when I've done other media, these countries should be careful because their rate could boomerang back to their April 2nd rate.
On that note, Mr. Secretary, the EU Commissioner-in-Chief Ursula von der Leyen tweeted earlier saying that we're ready for a deal. Should we expect the EU deal to get over the line by Wednesday?
We'll see. Again, I'm not going to get out in front of the president. It'll be his decision. I did meet with my EU trade counterpart this morning. Ambassador Greer will be working diligently over the weekend. So we'll see what we can do with the European Union.
But so it sounds like that's suggesting that one's in a better place than, say, Japan. We all obviously followed the president's posts on Japan over the course of the last few days.
Look, Japan are great allies, and they are in a tough spot right now. They have an upper house election on July 20th, which I think gives them a lot of domestic constraints in terms of doing a deal. So we'll see where the Japanese deal goes.
I just want to follow up on something you just said. You said that otherwise it'll revert back to the Liberation Day tariffs, which were very high. So is that what's going to happen if there aren't trade deals in place? I think previously you've said that as long as they're negotiating in good faith, the 10% sort of will carry over. You'll extend that kind of deadline. What's your latest thinking here?
My latest thing is we're going to do what the president wants, and he'll be the one to determine whether they're negotiating in good faith. So I'm not going to give people a 10% extension on national TV when they should try to get it across the finish line.
On international TV, no less.
Global TV.
Exactly, and no doubt being watched in EU capitals, in Asian capitals, because the deadline's looming. I'm really interested on the baseline and what people might expect long term if everything goes to plan over the next 2 weeks. Obviously, we've got two numbers we can focus on: 20% Vietnam, 10% that you did with the UK. Is the UK only got 10% because they were early, because they came with love and friendship? What is the EU or Japan, if they agree to all the terms, is it more likely to be splitting the difference between those two numbers, or what?
Again, I'm not going to talk about the deals on intergalactic television. But the UK came to the front of the line. Very good deals. I'll tell you, they negotiated very, very well for the British people, and I think both sides thought that it was an excellent deal.
Let's talk about the jobs report, because we got a pretty positive report, at least on the headline number. Unemployment rate goes down to 4.1%. You have been flagging the wages for blue-collar workers. You know, a lot of people didn't expect to see that at this time in the cycle, with the Fed being restrictive, with the tariffs in place. What do you think is leading to the resilience in the job market? And do you have any concern about what's under the surface there as far as where those jobs were created?
Well, a lot of the jobs were created by state and local government. And again, in my previous life, part of my job, part of my team's job was to take apart the economic data. And I can tell you, any 1 month is very noisy. I thought overall it was a good number, but a lot of the numbers like this can depend on when were teachers hired, when did they come off the payrolls. So, but I would say the overall trend is good. But what I'm really focused on is once the president signs the one big beautiful bill tomorrow, the acceleration that I think we're going to see right out of the gate here in terms of the private sector. When I go around the country or CEOs come into Treasury to see me, they've all been held captive by a lack of certainty on this tax bill. And now that they know that they can have 100% full expensing on equipment and for factories, I think we are going to see things take off between now and Labor Day.
So in the job market in particular?
Well, I think in the CapEx market, which leads to the job market. So, it'll initially be construction jobs, and then that we will see the workers come in to fill those new plants.
The market is taking it as reduced likelihood that the Federal Reserve would cut interest rates as soon as July, looking more toward the fall, because the feeling is that the economy is in good shape, jobs are still in a healthy place. Why don't they wait to see whether the tariffs are going to be inflationary this summer? Why is that not a prudent approach for the Fed?
I just look at the Fed's previous models, and based on their previous models, they would have already cut. So we'll see if they want to make a mistake here and not cut, then that's fine. We are at very high real rates here, but again, it's their decision, and I just think if they don't cut, then perhaps the cut in September will be bigger.
Mr. Secretary, it's really interesting that you say if they want to make a mistake, your framing of it, that's fine. I guess it shows a different scale of view towards commenting on Fed policy between you and the president, in that you're kind of leaving it up to them. You think it's fine, it's up to them. Do you ever regret the extent of Mr. President, of the president's commentary towards Jay Powell?
Not at all. The president is the most economically sophisticated president, certainly for 100 years, perhaps in history, and he has been quite right in his commentary on the Fed during the previous 4 years. And again, I think that the statement that Chair Powell made from the conference in Europe, where he said, well, we would have cut if it weren't for tariffs, that I'm not sure why Team Transitory thought that the gigantic fiscal spend coupled with added regulation would not cause inflation, and somehow that tariffs, which haven't caused inflation, and if they were to cause a one-time price adjustment, nothing's more transitory than that. But again, as I've said, I'm going to try to stick to mistakes they've made in the past. And as I've said before, medical studies have shown people who fall down tend to look at their feet. You look at your feet, you fall down more often, and I got a feeling they're still looking at their feet from 2022.
Yeah, fighting the last war, as we've seen with regulators. So do you think that they're being political? Do you think that Fed Chair Powell is political?
I think that it's a vote of the FOMC, the voting members. So we'll see. There seems to be a big dispersion in the so-called dot plot, the summary of economic projections between the Trump appointees and the non-Trump appointees. I'll let you read into that what you want.
No, I pointed it out before. Waller and Bowman pushing for a July cut. So, you know, your name gets floated out there. You have some odds on Polymarket of being the next Fed chair. Can you be a Fed chair and a Treasury Secretary at the same time?
Well, I think it hasn't been done since 1930-something, and I'm very happy in my job here. I think we have lots of good candidates for Fed chair. We will start working on that in the fall. We've been busy. The president's been doing peace deals, trade deals, tax deals, and we are landing the plane on all of those. So we're going to have more bandwidth after Labor Day.
That was not a no. I just want to point out on the double job. Very interesting. Secretary Bessent, thank you for the time today.
Good to see you.
And happy 4th of July.
Happy 4th, yeah. What looks to be a historic one. That is Treasury Secretary
Dual
Scott
jobs
Bessent.
are possible, Sky and CNBC.
I know, he pointed to the Sky. There you go. Treasury Secretary and Fed Chair, Sky and CNBC. It's been a pleasure having you. A lot of fun.
My honor, as always.
It is a shortened trading day, so we're going to get over now to Mike Santoli to lead us into the closing bell.
All right, thank you, Sarah. And Will, welcome to a special closing bell on this holiday shortened trading day. I am Mike Santoli, in for Scott Wapner. This make-or-break hour before the long weekend begins with a tension release rally pushing the key indexes further into record territory. A better-than-feared jobs report and the imminent end to the suspense over the big budget bill have freed markets to extend their recent gains. Take a look. The S&P 500 up now almost 0.9%, above 62.75. The Dow also up a similar percentage. And NASDAQ has retaken the lead from what had been a two-day rotation towards small caps, such as the Russell 2000, which remains up 0.9%. Treasury yields, they are higher as chances of a July rate cut have more than almost all but evaporated, let's say. You get the two-year yield is up the most, but you do see the 10s, 433 right now. It had been down by 4.2. We will discuss whether these suddenly ebullient markets have it right or are getting a bit too comfortable all this hour. But first, let's get to the key stories out of Washington. Eamon Javers is standing by at the White House following that big interview with Treasury Secretary Scott Bessent. But let's start on Capitol Hill with Emily Wilkins as we still await a House vote on President Trump's mega bill. Emily, where do we stand?
Well, Mike, right now, House Minority Leader Hakeem Jeffries is taking his moment. Really, the minority hasn't had much to do here. Democrats haven't had their fingers in this bill. But what Jeffries can do is that he can use what is called the magic minute to talk on the House floor for as long as he can. And it looks like as he enters hour number 7, what he's going to try to do is break the record previously held by Kevin McCarthy that he made when Democrats were passing Biden's big legislative priorities. And so that should probably take us to about 1:30, maybe 2 o'clock. After that, we expect Mike Johnson to speak. And you can see there, Kevin McCarthy went for 8 hours, 32 minutes, and he broke the record set by Nancy Pelosi for 8 hours and 7 minutes, meaning that maybe Jeffries might go a little bit longer than 8:30, maybe a little closer to 9. Look, he can talk for 9, he can talk for 10, he can talk for 11. At the end of the day, this bill is going to pass. There was a vote taken early this morning where all but one Republican voted to continue to advance it. Speaker Mike Johnson has told us that he has the votes. We have heard from some of the deficit hawks who had concerns, saying that after they spoke with President Trump, they feel more confident going forward, more confident that the White House will take further moves to address the current debt. And let's remind what's in this bill, because it has changed so much. Now, the House is going to pass exactly what the Senate passed, and the Senate did make a couple key changes. Into the bill, they put a $50 billion for rural hospitals. They also included for solar and wind tax credits. They allow them to get those credits if the project starts construction by 2027. And they also put in that $40,000 cap for SALT deduction until 2030. The Senate also took a number of things out of the bill. That includes that moratorium on states implementing their AI laws. That is now out. No restrictions on states here. They removed that excise tax on wind and solar. And they took out that so-called retaliatory or the revenge tax on investors and multinational companies for from certain countries that had levied a tax on the U.S. So, of course, after this, the White House is already planning for a bill signing on July 4th. We're hearing there might be some B-2s involved. Of course, we'll be getting more details as this continues. Mike?
All right, Emily, thank you so much for staying on top of it. Let's send it over to Eamon Javers with more from that interview that was just completed here with Treasury Secretary Scott Bessent. So, Eamon, obviously reiterating a lot of the points he's been making about this economic strategy of this White House for a time.
Yeah, Mike, that's right. You heard the Treasury Secretary there dismissing concerns about the deficit with this big, beautiful bill, as the president calls it, on Capitol Hill, saying that he simply doesn't believe the CBO numbers. He believes this bill is going to drive more growth. That'll be good for revenue. And, oh, by the way, he points out the U.S. is also going to get that tariff revenue that the president has been touting over the past week or so, much higher tariff revenue than the U.S. government has seen in decades coming into the Treasury. So some optimism there from the Treasury Secretary. Lack of clarity, really, though, on the status of this Vietnam trade deal that the president announced on social media yesterday. The president said there was a deal with the Vietnamese government to have 20% tariffs on Vietnam. Vietnam, in turn, would have 0% tariffs on the U.S. That hasn't been papered. We've seen no documentation. Nothing legal has been signed, as far as we can tell. The Treasury Secretary in that interview saying that it was finalized in principle was his understanding, and he hasn't talked to the U.S. Trade Representative about that today, so he doesn't know the exact status of it. One point of question that we've had, our Megan Cassell has been asking this since yesterday when this was announced, do these tariffs that the president announced, this 20% tariff on Vietnam, do those go on top of the previous existing tariffs that were already in place, or do they eliminate previous tariffs and go simply as a 20% flat tariff on Vietnam? The Treasury Secretary said that the tariffs at 20% don't go on top of the 10% tariff that the president had floated, but a little unclear here whether or not this 20% figure that the president is talking about goes on top of the previous existing tariffs on Vietnam. All of that might sound technical, very, very important, though, if you're an apparel manufacturer and trying to figure out what your prices are going to be and what your profit margin is going to be. The Treasury Secretary there, Mike, saying that profit margins in the apparel industry had been a little distorted during COVID, and they might have to come back to balance. If you're the CEO of an apparel manufacturer, though, you might not want them to come back to balance because you kind of like those hefty profit margins that you've been seeing in the past couple of years, right?
Right. If in fact you've been collecting them, I'm sure it goes company by company. Eamon, yeah, a lot to be sorted out over the next several days on the trade front as well. Appreciate that. Let's bring in Fundstrat Head of Research and Fundstrat Capital CIO Tom Lee, also a CNBC contributor, joins me here. Tom, good to see you.
Great to see you.
So we have this rally that's now extending probably beyond what most were positioned for, but it started in a moment of peak uncertainty.
Yes.
And even when we were in peak uncertainty, a lot of us were saying that's kind of usually forward-looking bullish. But are we now getting to a point where we have finally feasted on all of the uncertainty and now we have a lot of these blanks being filled in?
I don't. I think that it is appropriate that we are making new highs because the fundamental and the visibility is better now than it was in February at the old highs. And I think there's three levers that are going to get pulled. One we know is that the Fed didn't unleash liquidity at the April lows. So we have a Fed that's been on hold and tight. But if the information and the data comes in dovish, that's 12 to 24 months of Fed liquidity and dovishness. That hasn't happened yet. The second is that I think that there is a false argument. People are saying the multiples are stretched. The PE should be expanding because we've now had 5 stress tests that companies survived. They survived COVID, they survived the bullwhip effect, they survived the inflation surge, they survived the Fed fastest hikes, and now they survived Armageddon. If you don't have 5 more episodes, multiples will be higher 2 years from now. And the third is that I agree with anybody who says that, look, we've kind of reshaped some of the economic flows around tariffs, but that's an upside story because if it plays out better, that's an earnings surprise. So you have 3 levers that tell us that 6,200 is the market beginning to recognize we're in a better position, while $7 trillion cash is on the sidelines. And I can tell you, our clients, institutional clients, remain very skeptical. This is the most hated V-shaped rally.
I grant that given the strength of the rally, investor sentiment pretty much across the board has lagged. It's not as bullish as you would normally expect. The $7 trillion in money market funds, though, I mean, to me, that's a non sequitur. It always goes up. Unless you're at the end of an awful bear market, the money doesn't come out of money market funds. And then right now, as a percentage of total market cap, the S&P is like $60 trillion, or the U.S. market is. But it's like, what are we talking about?
Well, there's a couple things to keep in mind. One, in fact, money market balances have declined. They only started to rise really in 2022.
Right, they had a stutter step and then they went up.
If you look at margin debt, NYSE margin debt, the dollar amount absolute is still below where it was in October 2021. So you have like 4 years, it's 4 years and you're still not even higher in margin debt. And third, it really doesn't take, you don't need 60 trillion to come into the stock market to have it rise 10%. You probably need 200 billion. And I think there's a lot of high net worth money. I know there's a lot of our institutional long short macro that is shorting this rally. The long only managers are defensively positioned. They don't believe in a cyclical long. But look, if rates come down and the Fed starts easing, it's going to force people into a cyclical tilt.
In terms of the jobs number today, and how it bears on all of those factors, whether it's timing of the Fed, whether it's the underlying resilience of the private sector, which maybe is still kind of in watch and see mode. How does that bear out?
Well, today would have been a day where if it was weak, then the Fed has to change its calculus, but the job market's good. So now the waiting game is, how much will inflation surge over the summer? Inflation expectations are actually coming down. So now all that we're waiting for is, let it get through this CPI hump. I do think it means that once you get into September, we should really think about cuts coming. And that's what I would focus on more as an investor, that, well, that's a cutting cycle. The Fed won't just do one cut. They're going to continue cutting. ECB and the U.S., 200 basis point different in monetary policy rates. But if you take CPI year-over-year ex housing, which is how Europe calculates it, we're both at 1.9% today.
Yeah, we'll see if that does persist. Hey, if everyone's going to celebrate Fed going in September and December, guess what? That's what the dot plot said pretty much. So it's not as if they're two off sides, as many have made it out to be. Let's bring in Truist's Keith Lerner and Wealth Enhancement Group's Aya Yoshioka. Good to see you both. Keith, how are you kind of postured at this point market-wise? Because I know you've kind of gotten tactical around the lows. Now that we're extending to the upside, maybe in melt-up mode, how does it look?
Yeah, well, great to be with you, Mike and company. So, listen, I think this market has earned the benefit of the doubt as far as the uptrend. Yes, we have moved a lot off the lows, but the big picture, which we've talked about before, Mike, is this market's moved sideways for about 7 months. If you take out the kind of that one overshoot, which was an extreme, and then the technology sector has really been moving sideways since last July. As you look from more of a technical perspective, you're in gear right now. It's hard to be bearish when you have tech making a new high, industrials making a new high, financials making a new high. Now you're seeing this bit of a catch-up trade as well. The earning trends are positive as well. I think, listen, the biggest risk, which, there's some of the discussion, expectations have moved up as well, right? Valuations, we can argue about that a bit, have moved up. And we're seeing sentiment normalize, not extreme as well. So listen, Mike, I think we're still in a positive seasonal period as well. So I think the underlying trend is one of positive, and you have some of those catalysts like getting some clarity on the tax bill, getting some clarity as far as around interest rates, deregulation. So it's almost like some of those things we were looking for late last year are actually coming into vogue now. So that's a positive. Are we going to have some hiccups later this year in August and September? Probably. But for now, again, we would stick with that underlying uptrend.
I'm curious as to what your conversations are like with your clients. We're talking here about, whether investors are kind of psychologically bought into this new healthy-looking market, or if they're resisting.
Well, what we
Sure.
saw...
Hi, Mike. Thanks for having me. So, in terms of, what conversations we're having with clients, they're definitely a little skittish, just not being prepared for this uptrend in the markets, especially after all the news headlines that sort of whipsawed markets. But they're a little bit more comfortable with where the market has been now. I think that's why we're sort of cautioning perhaps the ride could get a little bit tougher during the summer. But I think, in the long term, we want to make sure the clients are just focused into the long-term nature of investing.
And within the markets, I mean, aside from just getting folks allocations where they perhaps ought to be in line with their goals, where within the markets seem like they're either underappreciated or maybe a little bit crowded or hazardous?
Sure. I mean, I think, everybody's talked about tech in terms of just the leadership. It's been the workhorse for this market for so long. And we continue to think that that's going to be the case. But, we have to be cognizant about valuations and where they at. But, the quality of these companies is very, very high. And so they deserve sort of premium multiples. It's just that, at some point they're going to fluctuate up and down just with some of the noise. And then I think, financials are a place that we all want to be exposed to, just from a cyclical standpoint, as rates come down. Currently banks are enjoying high interest rates, but as those rates come down, I think it's going to be very helpful from a cyclical perspective for loans and things like that. So we really like financials as well.
Tom, what's the message you're pulling from the, we're talking about new highs in industrials. Consumer cyclicals have kind of hung in there, right? So the stock market is not as if, hasn't really been leaning in the direction of we're headed for weakness in the economy.
Yes.
So what growth do you feel as if is now kind of baked in?
That's a great question, because you're right. I'd rather see industrials flat on their backs because the ISM's been below 50 for now 29 months. It's the longest stretch of being below 50 in its history of the survey. So I think there is pent-up spending, but the stocks have moved. Consumer confidence is flat on its back. Now in 2009, it was flat on its back, and we did a study back at JP Morgan that showed the best time to own consumer cyclicals is when consumer confidence is negative. So I'd say there's less upside for both industrials and consumer cyclicals, probably more for financials and small caps, but there is this relief from businesses as we move back above 50. And I think getting this bill passed and getting the tariff behind us will push the ISM back up, and it should lead to earnings growth.
Now, I mean, the case for small caps, I mean, I feel like we kind of keep going through this anticipation cycle of when things might line up for, they've moved again. Russell 2000 hasn't been above this level except for a brief period in the fourth quarter, and then you go back to like late 2021. So what pushes it over the line?
Well, I won't blame any investor who says, fool me once, fool me twice, fool me 3 times, like I'm not P.T. Barnum or whatever. But I do think it really depends on the Fed being committed to continuing its easing cycle. That's the setup we had before. And I don't blame investors for being really reluctant. But the good news is since the April lows, small caps have been outperforming and have the banks. That's kind of the participation you want to see.
Sure. Keith, I feel like it's interesting that we're all kind of in agreement here that there's still this reserve, of a little bit of skepticism among most kind of tried and true investors and professionals out there. And yet, I see some of these post-IPO moves, and you see what's happening in Robinhood and parts of crypto, and you see the daily options trading volumes. And it seems like there's a group in this market that's really pretty aggressive and highly active. So how do you reconcile those things?
Yeah, Mike, well, I think that probably suggests at some point we will have some gut checks, because sentiment, which was extremely supportive at the lows, I would say is neutral to maybe a slight negative as a whole. But also going back to like this move off the lows, 20%, we know looking at the data, we've seen 2-month moves of 20% about 10 times since the 1950s. And a year later, you've been up every time. That's a small sample. Things could be different this time, of course. But again, I mean, the big picture is there's a kind of this mix of skepticism and then this kind of really greed factor. You see the high beta stuff outperforming as well. So again, maybe that leads to somewhat of a gut check, but sentiment more broadly to us isn't a big hindrance, overall for this market, and the flow data is mixed. So again, I would put a little bit more weight on the underlying trend. But again, I also don't want to be complacent in saying we're not going to see any hiccups. It's going to be just a smooth ride forward when everyone is feeling, pretty good ahead of the 4th of July here.
Yeah, absolutely. And finally, I mean, the bond market is it seemed pretty agitated for a little while. People got a little maybe oversensitive to, let's say, the 30-year going up about 5%. We're talking about still wide deficits for a few years, most likely. How does the bond market's action speak to you? And what do you, again, tell clients about the role for fixed income here?
Sure, Mike. I think in the bond market, it's tough, right? I think bonds have always been this ballast and hedge against equities, and they're not as much of a hedge, especially in a stagflationary environment. But with that said, the Bloomberg Ag Index was up 4% year to date in the first half, and it's been the best first half since 2020. So I think bonds are still doing a good job, and they're providing income, especially to the retirees that are many of our clients.
All right. Yeah, I guess playing the role that maybe they were assigned for a while here. Tom, Keith, and I thank you very much. Appreciate it. And, of course, happy 4th. All right, we are tracking some big moves in the chip space. Christina Partsenevelos, all over that for us.
Hi, Mike. Well, the Trump administration just reversed a 6-week-old export restriction on chip design software to China, sending Cadence and Synopsys shares up at least 4% right now. This is really just a classic President Trump negotiation tactics. He imposed the restrictions back in May as leverage when China cut off rare earth exports in early April. Now that China's potentially agreed to resume rare earth permits, President Trump is lifting that software ban. So the playbook is relatively clear. Use tech restrictions as bargaining chips, but not necessarily permanent policy. Mizuho says in a note today, this restores at least 10 to 12% of revenues for both Cadence as well as Synopsys that was at risk. The big question is what's next? NVIDIA, AMD's AI chips restrictions still remain in place for now, with NVIDIA's CEO very vocal in his stance against them. He's called them a failure before. But the hope is that these AI controls could get similar treatment. Mike?
All right, Christina. Thanks so much. We are just getting started here. Up next, former Fed Governor Frederick Mishkin breaks down his first reaction to the jobs report, what it might mean for the Fed's next move. That's after this break. We are live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
Más $10.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Why should you trade options rather than stocks? Because they offer higher returns, are cost-effective, and can actually...
With not only the prime days, but also from the tariff deals, if there's any, any confirmation on any further trade deals or any disruption in potential trade deals moving forward. But you got an example trade for us, Nate, here. Walk us through it.
Yeah, no doubt. And you're right, Tom, it's funny. You've got the prime day basically landing right in the middle of that July 9th window. Yeah. So that's interesting to note. But generally, historically, the prime day is viewed as something that is relatively positive for the stock. You mentioned 10% growth. That doesn't surprise me. Consumers probably feeling pretty good with stocks at all-time highs. But look, as I mentioned with the RSI on the S&P 500, what you have to be worried about, I think, in terms of whatever bullish strategy you're considering right now, is that you have to respect where the overbought nature of the indices are, and that if we get a pullback in the ocean, that perhaps that could take your stock that you're looking at down. That could be the case with Amazon. Not that there's going to be any kind of bearish rollover, but just some consolidation, some digestion. So with that in mind, and knowing that we have a 3-day weekend here, so time decay is an issue, I was looking at a relatively neutral, you could call it bullish strategy, going to the July 25th expiration. I kind of want to avoid any earnings plays right here, right now, and then seasonality when you get towards the end of July into August can be have a shift there towards bearishness. So here is a credit put spread, a bull put spread. I'm just basically selling in this example trade that 215 put, and I'm buying the 210 for protection, $5 width, $1.20 credit. So with a strategy like this, should you get a pullback, you have some buffer between the current price at 222 down to 215.
El comercial
If
de
you
ojos
look
está
at the
chido.
20-day simple moving average, it's around 215. When you're in an uptrend, that 20 SMA can be a place where you get a check back to on that uptrend. So that makes sense from a technical perspective.
Hermoso.
But Tom, this isn't a very aggressive trade. It's because of the overbought nature of the markets. So this is saying I'm, constructive or neutral to bullish on Amazon. This would be an option strategy that takes advantage of time decay. And you hope that next week won't be too volatile.
Yeah, let's break this one down. July 25th, a weekly option. So 22 days to expiration, about 3 weeks. Get the long weekend coming up here. So it's positive time decay on this trade. So you want it to go to zero. That's the idea on this position. But selling the 215 put, buy the 210 strike put, short $5 wide, neutral to bullish put vertical, collecting roughly about $1.20 credit. It might be about a dime lower than that right now. But if you collect that $1.20 credit, that's what you can make, $120 per spread, but it takes your break even down to $213.80 to the downside. So basically about $10 below the current share price in there. So you have that cushion to the downside. Probability of that short 215 strike that you sell in this strategy of finishing out of the money is about 70%. So those are the trade-offs that we always talk about. You've got $360 or $380 in risk on this trade to make only 120, but you've got better probabilities in your favor that it's going to remain above that short strike over the next 3 weeks. I think that's one of the things. And Nate, this is one of those strategies when you look at it, it's like, yeah, I think a lot of people feel like they've missed the rally. Maybe they're still bullish on Amazon. They're going to wait for a pullback that might not come. And this is a strategy that potentially takes advantage of that, right?
Yeah, so you're right. So you're short that 215 in the event that Amazon does close between 210 and 215. You're subject to assignment at that expiration date of July 25th. And I know, Tom, it's kind of like in this type of market, you're getting rewarded for chasing. Nate, why not put on, a call or a bull call spread or get a little more aggressive or a, call diagonal? And it's because of, timing is everything. And you have to consider, is this the place that I want to bull up on a lot of these tech stocks that have been doing so well? Or should I, kind of take a step back, cool my jets, I can collect some credit. If Amazon moves sideways, that's good for me.
Yeah.
And $1.20 may not seem like much, but if you're considering that you have $5 at risk there and $1.20 on $5, that's over 20% gain on that requirement that you'd have there. Yes, on a risk-reward basis, you can lose 380 versus 120. From that perspective, it's not great. But time's in your favor, and the percentage gain should Amazon stay above 215, not bad.
Yeah, and just looking at it in this regard, you mentioned if you wanted to, if you're bullish and you use that same July 25th cycle and you bought maybe the 225, 230 call vertical, that's going to cost you a debit, and you're going to need to move higher. This type of strategy, you don't need to move higher. The stock can remain where it is. It can go lower, remain above that break even of 213.80 and still be profitable on it. So there's the trade-offs and the better probabilities of success by selling the out-of-the-money put vertical. All right, great breakdown of that strategy for us. Thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, for joining us. But coming up after the break, we're going to be joined by Landon Swan from Like Folio for a look at sentiment data in Starbucks. The coffee retailer stock has bounced about 25% off of those April lows as the new CEO's turnaround plan continues to evolve. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Mañana 4 de julio.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from
lower rates has happened in Turkey, for example. You get actually monetary policy that's very unsuccessful, high inflation and not very good for the economy. In fact, this is one of the things that's actually been hurting Erdogan politically. So although Trump thinks it's great to talk about low interest rates, it's actually not in his interests. Previous presidents have understood that, and we've had a history really starting very much in the Clinton administration of presidents actually, both Republican and Democrat, not trying to get the Fed to lower rates just because it'd be good for the economy in the short run. So I think that actually this is a problem for Trump. We've actually seen that it creates inflation scares, that loan bond rates are higher than they otherwise would be. None of this is really good for him politically, but that's not the way he's thinking right now. So maybe that'll change, but I sort of doubt it.
Yeah. Yeah, I guess previous presidents no doubt had their frustrations, but did not try to kind of perpetrate them publicly. Frederick, Michigan, appreciate the time. Thank you.
You're very welcome.
All right, up next, Morgan Stanley Wealth Management CIO Lisa Shallett is back. She'll tell us where she is finding opportunity in the second half. Coming up, Closing Bell will be right back.
At AT&T Business, we guarantee our best deals on any smartphone with your choice of our best plans. What we can't guarantee, your employees having a similar work style. You hired them. Or your staff all having the same vibe. I like this style. And your design team being on the same page.
Bold choice.
For 2002.
What AT&T does guarantee? Our best deals on any smartphone with your choice of our best plans for any employee. And we mean any.
I can't wait to see their faces when we come out.
What seems to be the problem, soldier?
The belly's full of Greeks.
Sneaky cowards.
Innovation changes everything.
Send it back!
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
This is Mia. She dreams of taking her boutique swimwear brand nationwide. With her business growing so fast, she needs fast funding to keep making waves. That's why Mia has U.S. Bank Business Essentials, a combination of checking and card payment processing, giving her access to funds typically in 24 hours. Because we love watching her make a splash. That's the power of Mia. And this is the power of us.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for
Y
Corient.
ahorita la vuelven a, ¿cómo se llama? La vuelven a halt, o la suspenden.
As an independent financial advisor, I stand by these promises.
As a fiduciary, I promise to be the financial steward that you and your family need.
I promise to put your long-term financial well-being above any short-term transaction.
Everyone has a big picture. My job is to help you invest in yours.
Charles Schwab is proud to support the independent financial advisors who are passionately dedicated to helping people achieve their financial goals. Visit findyourindependengadvisor.com.
A special early edition of Closing Bell Overtime. Market wrap-up before the holiday weekend. Plus, analysis of the June jobs report. John Fort, Morgan Brennan, Closing Bell Overtime. Today 1 Eastern. And streaming on CNBC+. Double your investor IQ. Become a smarter investor and save when you bundle CNBC Pro and Jim Cramer's Investing Club. 2 premium investing tools, 1 special price. Go to cnbc.com/access now. Terms and restrictions apply.
what we've seen so far is that tariffs haven't hurt. You know, the dog that didn't bark was that tariffs going to hurt the economy, we're going to hurt the markets. Market had the fastest recovery ever, from the low in April, from a 15% decline, and you know, we're at new highs in the market.
That was Treasury Secretary Scott Bessent last hour talking the market recovery. This as the S&P 500 and NASDAQ again head for closing highs today. Here to share her playbook with stocks at records, Morgan Stanley Wealth Management CIO Lisa Shao. Lisa, appreciate you coming on to weigh in here. I mean, it's certainly true, as the Treasury Secretary says, we've had this very rapid and complete recovery from that tariff scare. Does it tell you that the economy has sidestepped whatever impact we thought we were going to get from tariffs?
No, I don't think we know that yet. I think, you know, most folks recognize that.
¿Qué pasó, amiguito? $100 en un maldito día. $100. O sea,
used to. And then it's hard to bring that back just because there's still that cost element in there. And if the experience, while it might be better, it's not going to be life-changing again, right? Because this is an established company, and maybe, you know, those numbers that you mentioned as far as your data goes, they don't come back as fast as maybe some of these investors think it might.
Yeah, you're exactly right. It takes a long time to turn that consumer experience, which is why companies have to be so careful. They have to guard that so well, and I think that's what got Starbucks in trouble. They moved away from what got them there. And, you know, it's basically they took the small coffee shop and cloned it nationwide. And you knew what you can order everywhere. And you got your favorite drink. And if you went to one location to another, you knew that it was going to be the same, but it had that small coffee feel. And they moved away from that. And he's trying to get it back, which is smart. But it's going to take a while. And in the meantime, people have been checking out and discovering other places. And once you kind of lock in, you know, it becomes a habit. It's hard to break that habit. So it is a very slow ship, not just to turn the company, but to turn the consumer. That's what investors are starting to realize, is that, you know, this isn't, you know, hire him and 2 quarters later, everything's great. It's going to take a little bit of time. So that's the main concern. And again, the stock is kind of priced. It's starting, I think, to price it in. And that's where you get, you know, I'm a contrarian. You want to always be a little bit against the grain so that when something happens that people don't expect, you know, it moves in your direction. So I think we're starting to get to the point where a lot of institutions, I talked about 5/6 of money in Starbucks as institutions, a lot of them are saying it's going to be fine, just wait it out. But the longer it takes, you start getting a little confidence shaking there, could be a problem. But yeah, to your point, I mean, they're not going to lower prices. The margins are 7%. You would think it's higher. They're selling coffee and sugar, but you know, it's a lot to put these products out, and with tariffs and everything, that inflation and you know, labor prices going up, they're just not going to have that room. So they have to win on experience, which is what they're going for. Right. They got away from it. They're going back to it. How long is it going to take? That's the question. But again, while I do think this is probably not a terrible buy here in the mid or lower 90s, I think there's a lot better places to put your money.
Yeah, in your data, you know, the web visits versus the stock price, where we've seen a bump up in the stock price. You've got some activist investors in there, Elliott Management, Starboard also in there also, you know, so that kind of piques investor interest. But they better change their, you know, their rewards, because you used to be able to get a free drink after, you know, maybe a couple weeks of drinking it. Now it's like, I don't know, you can barely use any points. You're not going to get anybody to come back unless you increase that rewards. Maybe I'm speaking from experience there, Landon, on that one.
Sounds like it.
Yeah.
Sounds like it.
All right, great breakdown for us, Landon. Have a great weekend.
All right, happy Independence Day. Thank you.
Yes, thanks. All right, that's Landon Swan, co-founder of Lifefolio, breaking down the data that he has on Starbucks. It's made some inroads from those April lows, but their data, it might be a wait-and-see type of story. And that sets me up for our example trade here in Starbucks, with the stock up about 25% from those April lows. So I looked at a strategy that, hey, maybe it's one of those wait-and-see type of strategies. Maybe you want to own the shares, but you want to maybe collect some yield while you hold those shares to maybe wait for that rebound. So I looked at a covered call strategy in Starbucks. Now, they report earnings at the end of July on the 29th. So I want to avoid that earnings event there. So I looked at for every 100 shares of stock you buy, you can sell an upside call against it. I went pretty tight on this one, about the 96 strike call. So basically about $1.50 above the current share price, so not too far above it. Every 100 shares of stock you buy, you sell one of the July 25th weekly options that expire in 22 days, the 96 strike call. So it creates this covered call strategy. You're paying roughly about a 92.40 debit. So what, in essence, you're buying the shares, but you're buying them at a discount because you're selling that out of the money call to the upside in that July 22nd weekly. The debit you pay on this is going to be your risk also. You got about $9,240 in risk. So there's a lot of risk, right? Because it's capital intensive, because you're buying the shares. But the break even on this is also at that 92.40 level. So you're buying it at the shares at a discount, like I said. Now, as you get closer to expiration over the next 3 weeks, you'll have that opportunity or potential to roll or adjust that short option. And the hope there is that that you collect credits, right? And you reduce that break even, increase your potential profitability on this one. You do have that risk to get your long stock taken away if the stock runs up through the 96 strike and you remain short those calls. So keep that in mind on this one. Now, why do the covered call? Well, the stock does pay a dividend. It's about 2.6% dividend yield on this. If that continues to get paid out, there's the yield that you would collect on a quarterly basis, right? But then also the ability to roll or adjust those short options continues to create yield for you also. And as I mentioned, increasing potential profitability. So this might be one of those strategies. It's a you get paid to wait type of strategy. Even if the stock consolidates here, maybe goes a little bit lower, maybe goes a little bit higher. You cap out gains on this type of strategy, but you're creating yield by selling calls and being able to collect that potential dividend. So good look at the cover call strategy, kind of setting up with what Likefolio brought us as far as data goes. All right, we're going to take another quick break. We come back. We're going to take a look at Oracle. The cloud stock is at record highs today after the company expanded its Stargate deal with OpenAI.
Musiquita de elevador, ¿por qué no?
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Oracle, let's get a quick market update as stocks have extended those gains to all-time highs for the S&P 500 and the Dow. The benchmark is up nearly 0.9%. The Dow up over 370 points. The NASDAQ 100 up about 1% on the day, and the Russell 2000 up over 0.8% as we hit record highs. The S&P 500 and NASDAQ 100 in record high. You can see the heat map here. A lot of green on that screen. All 11 sectors of the S&P 500 are positive today, led by information technology and financials. And one other item of note, the Dow Jones Industrial Average only 0.5% below its record highs. Parabolic moves here. Overbought conditions on a technical basis for a lot of the or for the major indices, but at the same time, the momentum continues to the upside. All right, let's get into a discussion about Oracle. This stock's hitting record highs. They announced the expansion of their partnership with OpenAI on their Stargate project here, some more investments. Bringing George Still, a senior markets contributor here to talk Oracle. George, nothing's going wrong for Oracle. This legacy tech company is knocking out of the park. Their backlog of orders is in the over $100 billion right now. So the AI play here for Oracle seems to be working out well, but this thing's getting stretched on a technical level.
It is, Tom. I mean, ever since the earnings announcements, just going back to June, the stock has made a remarkable run higher. And, it does look a little stretched from the standpoint of the parabolic move we're seeing in Oracle. But, at the same time, you have to consider some of the growth metrics for Oracle and also the software as a service and cloud infrastructure-based products that they offer, everything from human capital management to enterprise resource management. And you have to think of Oracle as really like a central processing software, effectively the middleware or backbone to enterprise software. And the other thing about Oracle is they've been making a lot of impressive movement into autonomous workloads when it comes to manufacturing, supply chain procurement. So they've expanded their software offerings horizontally. And I think that's essentially what we're seeing with the price action really manifesting some nice returns. I think over the last year, the stock is over 60% to the upside, up 40% on a year-to-date basis. Been a remarkable mover. I mean, it's a pretty large company now. If you look at the market capitalization, I was surprised to see it close to $700 billion. So we talk about the mega caps and we forget some of the other periphery players like Oracle, which is becoming much like a large mega cap company. Partnerships recent, which include, of course, Amazon Web Services. And the other one compelling is the OpenAI partnership with the Stargate Consortium. And with that said, too, some of the analysts are still bullish. TD Cowen recently upgraded the stock. They maintain a buy rating with now a $275 target versus $250 previous.
George, when you look at this, is this about the AI infrastructure build-out? It seems like Oracle, the more I kind of dive into the basics and fundamentals of this company, is Oracle is there to kind of mesh all the AI infrastructure build-out together at this point, right? And, all their customers right now are Fortune 500, companies across the globe. So as this AI infrastructure investment and build-out continues, Oracle has to be a part of that. And I think, is that the reason that you're seeing maybe, the valuations going up where they can actually, if those growth rates continue to expand, that they're going to be able to support the higher valuations that we're seeing for this company just due to the necessity that Oracle has within AI at this point?
Yeah, I mean, I think of a couple. I'm going to add another company here, Tom, just quickly. In terms of these special situations, Broadcom, another one. I think Oracle is especially special because of its software position. Broadcom has application-specific integrated circuit technologies, which are specific to unique applications needed by, of course, hyperscalers and the AI infrastructure. But from a software standpoint, I think Oracle is the mainstay player to integrate the backbone for all of these applications, whether it's cloud security, database management, enterprise resource management, human capital management, and even, like I said, supply chain logistics is another area that Oracle is blending into. Database management, remember the Cerner acquisition, so it gave them access to the healthcare system and healthcare data management networks. And so with that said, I think this is really such a large company, and their presence is so profound. To integrate all these technologies together, you need a central processing software. And that's where you have to think of Oracle as the central processing or a backbone software to enterprise. And with that said, you're right. If you do look at the valuations, now in context, if you look at the historical earnings multiple on a 5-year average, it's around 18 to 19 times. Right now, based on this year's earnings, 34 times, and next year's 28 times. So it is rich based on this year and next year's EPS estimates right now. But at the same time, the growth rates are nearly double their 5-year averages. And if you look at some of the rates I'm talking about, revenue growth rates in the last 5 years around 6%. They're expecting 15% in the forward 4 quarters in earnings growth. And this is important because in the last 5-year average, 7% earnings growth. Now they're expecting 16%. So those two metrics, both in sales and earnings, are expected to be basically double the rate of change that they were in the last 5 years. So perhaps, again, this is where I say perhaps, that earnings multiple, which is essentially about 1.5 times the historical average, may be justified. All else equal, they have to, of course, hit their numbers and then, of course, guide higher on a forward basis.
Yeah, valuation's getting stretched here a little bit, but as they get more partnerships, is that one of the keys here, George, real quick before I let you go? I got about 30 seconds. Is that one of the keys here is the partnerships as they continue to expand those because of the necessity of what they do in the AI infrastructure build out?
Yeah, I mean, I think that's critical. I think for Oracle, this is what they're doing. They already have such a large presence in the Fortune 100, even the Fortune 500 companies, like I said, as a central enterprise resource software. But the new partnerships are establishing, and even added to that, you know, with OpenAI being primarily capital invested by Microsoft from a founding standpoint, you know, Oracle's just adding more partnerships where it's OpenAI, Amazon Web Services, Microsoft. The growth trajectory is still there, but the other thing is they're such a cash cow too. They're already making tremendous amounts of free cash flow yield, and now on top of that, you're adding growth. And so these are two, you know, quite powerful financial variables that can keep the stock going. But you know, at the same time, like you said earlier, Tom, the stock looks a little bit of extended, and it typically has these, you know, stocks. Every stock has its own personality, but this one typically has these sort of powerful moves, both up and down. So that's something to be mindful of as we move into the summer months.
All right, great breakdown for us, George. Appreciate it. That's George Tiller, Senior Markets Contributor here on the network, breaking down Oracle. Positive, and if you look at the stock, the parabolic move, Relative Strength Index, or RSI, is above the 80 level. So overbought. Anything above the 70 level is considered overbought. It's overbought on a technical basis. It's above its 50 and 200-day moving average. The 50-day moving average is $174. This stock's trading $236 at this point. So we got a bonus. We got 2 trades for you to look at here. And, you know, these are just example trades. If you think this thing is maybe overbought, this is a strategy that may take advantage of a potential down move in the shares. So the first one that I'm looking at here is out in the July or the August 1st weekly cycle. So you've got nearly a month in this position here, 29 days till expiration. Because implied volatility levels are really low, the IV percentile rank about 37%. So we're in the bottom 1/3 of what we've seen implied volatility levels over the last 52 weeks. So this strategy takes advantage of that lower implied volatility because it's cheaper to buy a vertical in a low volatility environment. So going out to that August 1st weekly cycle, 29 days to expiration, we're going to buy the 235 put. It's basically at the money at this point, just slightly below the current share price. And then against it, because we want to offset some of the costs and make this a spread, we're going to sell the 220 strike put. So a bearish $15 wide put vertical to the downside. You're going to pay roughly about a $5 debit for this $15 wide vertical, right? So risk reward setup's pretty good. You're risking $500 to make an extra $1,000, right? If this thing expands to $15 on this if it goes below 220. So the debit you pay is going to be your risk, as I mentioned, $5. Your break even to the downside, $230 or $230. That's about $6 below the current share price. So you do need a move on this type of strategy. But one of the keys with this one is it's a bearish directional example here. But you've got some flexibility as far as trade management goes, because if you get the move you want ahead of expiration, maybe over the next week, maybe over the next 2 weeks, but before expiration, if you're doing multiple contracts, you can maybe close a portion of them, close the whole thing ahead of expiration if the market's open and liquidity is there. So that gives you some little bit more flexibility. If you think the stock's overbought, this is maybe a way that you can use the option market to get some exposure to the downside if you think maybe it's going to pull back. But you do need that move back below 230, that break even. Now, let's flip the script here a little bit. It's still directionally a bearish example that we're going to look at with this next trade. A little bit shorter duration too, but we're also going to give ourselves better probabilities of success. On the bearish put vertical that we just talked about, you need a move to the downside, right? This strategy, I'm going to flip it. We're going to do the call side, and we're going to sell a call vertical here. And this is going to be out in the July 18th monthly options that expire in just a couple weeks here. We're going to sell the 240 strike call, and then against that, because we want to stay risk-defying, because the stock can still continue to move higher, we want to protect that short call there, buy the 245 strike call, all in the July 18th monthly cycle. You're going to collect roughly about $1.50 credit. It's probably trading closer to $1.75 right now. You can collect a little bit more. Stock has moved higher. But if you collect that $1.50 credit, that's what you can make, $150 per spread with $350 in risk on this position, right? So here's the trade-offs, right? On the long put vertical that we bought earlier, $5 to make another 10, right, on a $15 wide bearish put vertical. Here on the call side, it's a short $5 wide call vertical that I'm only collecting at $1.50 on with $350 in risk. So those risk, the profit and loss kind of flips on these. But what's the trade-off that we always talk about? In that July 18th cycle where you're selling the 240 strike call, that's got about a probability of 57.5% that it'll be out of the money at expiration. Now, if you collect that $1.50 credit, where does it take your break even up to? 241.50 to the upside. That'd be a new fresh all-time high to get through that break even on this one. So this is a little bit more conservative. You profit in 3 out of 4 scenarios on this one, right? If the stock goes lower, stock stays where it is, or stock goes higher but remains below that break even of 241.50, you can be profitable on this type of trade. The other put vertical that we bought as an example prior, that was one where you need a move, right? There's only one scenario where you profit in that one, and that's if the stock moves lower. So those are those trade-offs that we always try to instill in our viewers and traders at this point. So those are the things that you look at. You got the double bonus package here on Oracle with 2 different ways to look at maybe a bearish example here in Oracle. Why don't we go ahead and get ready here for the closing bell. Stocks have come off of those session highs, but we're still in the green. The S&P 500 at record highs, the NASDAQ 100 at record highs as we close out a spectacular week for stocks. The S&P 500 so far this week up 1.7%. The NASDAQ 100 up about 1.5%. The Dow Industrials finished the week up 2.3%, just 0.5% below those all-time highs. The Russell 2000 up 3.5% so far this week, now only 8.8% below its record highs. So Great week here for equities going into the long holiday weekend. Everybody, thanks for joining us here on Fast Market. Be sure to download the Schwab Network app, available in the Apple App Store. And tune in 24/7 on schwabnetwork.com. Have a great 4th of July weekend, everybody. USA, USA.
Welcome to Schwab Network's Market Overtime. I'm Diane King Hall. Our guest today knows what it takes to lead, whether it's on or off the field, protecting the league MVP quarterback or making smart financial moves. He's a 4-time Pro Bowler, a key force on the Buffalo Bills offensive line. He's also making plays in the financial world. Dion Dawkins, a.k.a. Schno. Welcome to the show.
Yeah,
that's right. I
or
love
welcome
it.
to the show.
There we go. I heard, and actually, so I want to get into where your nickname came from, but I heard there was this viral moment during one of your games where you were mic'd and they caught you singing Schno.
Yeah, I'm always doing something. Literally, I'm always doing something. I think one of those moments is like you're talking about. I took a fan's goggles. It was snowing outside. I took a fan's ski goggles and I put them over my helmet, and I was walking around the sideline with the goggles on. Then I made goggles and sold goggles, and people love them.
Oh, I love it.
So it was super cool.
And sold goggles, so that gets into your financial savvy. And so I want to dive deep into that because I hear you do a lot in Buffalo and beyond. Let's talk a little bit about your nickname, where it came from, and how it's evolved.
Yeah, so Schno, I'm from Jersey. So with me being from Jersey, you know, I go through all 4 seasons: summer, winter, fall, and spring. I would wait for the winter months. When I was a kid, we didn't have cell phones, so I was on the landline. Like, we still would wait for the landline phone, and I would wait for the rumor of a snow day, and if the phone rang, I knew it was grandma or whoever, but it could have been the school calling to say that it was canceled. And if the school day was canceled that following day, I knew it was a lot of snow coming.
Okay.
I would set my alarm early. I would wake up and I would knock on doors and ask people if they wanted their driveway, their walkway, and even their car started if they had to go to work. And that's how I became the Schno man, because who's outside all day? Snowman. And the snow day. And then, you know, I kind of became that, so I became Big Schno.
Would you credit that for, you know, kind of your early interest in entrepreneurialism?
I would say yes. It started then. I was young, and then when I got to high school, I just figured out ways to, you know, help it. Like, I took a graphic arts class. I started off making business cards for the shoveling, and then I went from shoveling snow to raking leaves and even walking dogs. Like, I had it, but people would only call me for shoveling snow.
And it just kind of grew. No conozco mucho de fútbol americano, pero igual con ese jugador hay un hype y por eso
sale on the day after a strong jobs report that sent mortgage rates slightly higher, as our Diana Olick just mentioned in the last hour. But home builders still positive for the week. It continues. It's some June momentum. The ITB, or the iShares Home ETF, actually grew about 4% in June. And lastly, shares of TripAdvisor higher after the filing revealed activist investor Starboard Value had taken a more than 9% stake in the travel company. TripAdvisor shares, though, were largely flat on the year before this news came out, and also they fell about 30% back in 2024. It's just the latest push from Starboard, which most recently landed 2 board seats at also software company Autodesk. Guys?
All right, Christina, thanks. Bond yields rising following this jobs report, and the expectations that a July cut is, well, unlikely to say the least. Let's get to Rick Santelli in Chicago for more on that. Rick?
Yes, John. Wow, what a wild morning. If you look at the chart of 2s and 10s intraday, it pretty much gives you all the information you need. Both of them popped, but 2-year, you see that blue line? It's higher than the 10-year. That's significant because with a strong jobs report, it has huge Fed implications. And when you have Fed implications, it usually is the short maturity. So the curve is flattening as we see short maturity yields higher. And if you go and open this up, you can clearly see in a 1-week chart on 2s and 10s, the same dynamic is true. Now, Fed fund futures have had a wild ride the last couple of days. Today, boy, did they drop. Fed fund futures, when they move lower, they're taking out easing. When they move higher, they're putting easing in. That's a 2-week chart. So basically, we see that December of this year, Fed fund futures are at the lowest level, which means most likely we're going to have to be looking towards SEP. And even that potentially, with some job reports in between, never know how it's going to turn out. This one wasn't supposed to be as good as it is. And finally, the dollar index. I could sound like this is optimistic. It's up almost 0.5% today. That's a 3-session chart. The problem is the strong move in interest rates is stabilizing the dollar, even pushing it up just a smidge. But for the most part, it's still bumping along at a level we haven't seen on a closing basis since Feb of 22. John, back to you.
I'll actually take it. Rick Santelli, thank you, and happy 4th of July to you. Well, the major averages are ending the week in a positive territory following a strong jobs report that suggests the economy is still humming. Will this data give investors a reason to keep the rally going? Joining us now, right here on set, Senior Fellow at the Council on Foreign Relations and former Bridgewater Associates Chief Investment Strategist Rebecca Patterson. Rebecca, welcome. It's great to have you.
Great to be with you guys.
Let's start right there. Does this market melt up with the S&P and the NASDAQ at record highs? Does it make sense?
You know, markets move on what's not priced in. And what was not priced in this morning was a better than expected jobs report. So I think given that upside surprise on the labor market and relief that the economy is holding in there, yes, it makes absolute sense that the market's higher today. But I do think it's important if you go under the hood of the jobs report, it's not as good as the headline. You know, we only saw 74,000 private sector jobs. That's the slowest job growth so far this year, and less than half of the industries in the report had job growth. So if you look at the cyclical part of the economy, the labor market is continuing to slow.
So we just talked about it with Rick, but does this take even the slightest possibility of July off the table? And if it's taking it off the table because the data is better than expected, is that actually a good thing?
Well, yes, it takes it off the table. I would be absolutely stunned to see a July rate cut. I don't see any evidence that it would be required. And I think even September is a big question mark. But yes, it is good news. The fact that the labor market is moderating, but not faster than expected, not as much as feared, that is good news. Because as long as consumers have incomes, they can keep spending. And if they keep spending, companies have revenues, and the stock market likes that.
Let's get back under the hood, though, because you mentioned that not everything is simple under there. And for years now, we've seen this bifurcation between the working class and, frankly, the working poor, and then the affluent. But now we also have this bifurcation between the young, the job prospects for college graduates, and those who have been struggling to find employment. That got much worse in this jobs report, even than it had been up to this point, right?
Yeah, and that's going to be an interesting thing to watch as we go forward. So, you know, we're talking about jobs. The other big news today, obviously, is the fiscal package that isn't passed yet, but I think we can safely assume it's going to get passed soon. And within that, you do see some benefits, social safety net, taken away from the lower income households in the United States. Now, the timing is interesting. Politicians keep an eye on elections, and for example, the Medicaid working requirements based on the Senate bill don't kick in till after the midterm. So they're trying to make sure that this cohort of voters is okay economically through the midterm. But even if they have that pushed out a little bit, there's still some social safety net features like SNAP, food assistance, that could in theory go away this year. Then you have the younger cohort. They're going to be getting hit as they have student loans to pay again, and they're having a harder time finding jobs. So even though today feels good, great job numbers, better than expected, I still think we're going to have a significantly slower economy in the second half of this year.
Well, part of the trouble, isn't it, is that for the CNBC viewer demographic, right, tends to be a bit more experienced and to have some capital to invest in the markets. This is not only a good market, this is a good jobs report, it's been a good year, et cetera, et cetera. But what's coming down the pike doubles down on the benefits for that audience, including the extended tax breaks and some of the philanthropy provisions. But as you mentioned, it doesn't get any easier for the young and the struggling. What's the impact, the forward impact on the economy from that? Is it good for the CNBC viewer, for us, or does it start to affect everyone?
I mean, I think right now it is good for the typical CNBC viewer, right? The typical CNBC viewer probably owns their home. They have money in the market, probably very clearly, and so they're benefiting from the gains we've seen not only this year, but over the last 15 or so years. And so their wealth levels and their income levels tend to be higher. So they're in a good place for now. But we have to keep a close eye. You know, company confidence stays pretty soft right now. We aren't seeing a lot of capital expenditures, investment, hiring happening. Take, again, that 74,000 private sector jobs. That was very soft. It is interesting, the fiscal bill, one of the positives of it is going to be the immediate expensing for R&D and CapEx. And that's a question I have. Are companies going to say it's a good time to make those investments and move ahead? Or are they going to say, yeah, this is helpful, but I'm looking at tariffs. I'm looking at a huge amount of policy uncertainty still. This isn't enough for me to spend that money to make that big investment. I don't know which way that's going to play, but I think that'll be a big factor in the second half of this year in terms of how quickly the economy slows.
Bond market, interesting, because yes, we've seen the curve flattening today, and in general, we saw yields tick higher, but I was looking at the 10-year Treasury yields. We're down from May. We're actually down from the worst of the market turmoil post-Liberation Day in April, and we're down from the peak back in January. We keep hearing about bond vigilantes. We've seen them in the UK, for example, in this week, alive and well. Where are they in this market?
I don't think we're out of the woods on the bond vigilantes in the United States. You know, the fiscal package, even if it passes today or the coming days, the debt issuance that's going to have to ramp up to pay for these bigger budget deficits, we're not going to see longer duration issuance pick up probably till Q1 next year.
Okay.
So the supply tsunami of bonds that we need to have bought, that's ahead of us. It's probably not a 25 story.
All right. Rebecca Patterson, thank you.
Thank you.
Well, now the latest on the budget bill, as House Minority Leader Hakeem Jeffries has been speaking on the floor since 5 a.m. in an effort to stall it. Emily Wilkins is on Capitol Hill for us. Emily.
Hey, John. Well, yes, we are waiting. As Speaker Mike Johnson has said that we will vote as soon as Hakeem Jeffries finishes talking. Very interestingly, Jeffries is taking a page out of the Republican playbook. This is exactly what Kevin McCarthy did when he was minority leader in the House and Democrats were passing Biden's major legislative package. Now, McCarthy set a record with 8 hours, 32 minutes as far as his speech. It seems like Jeffries is on track to break that. McCarthy, of course, was breaking the record of then Minority Leader Nancy Pelosi, who spoke on the floor for 8 hours and 7 minutes. So we'll see how much further past 8:30 Jeffries goes. But one thing is for sure, whether he talks for 9 hours, 10 hours, there will be a vote on this bill today, and it will pass. We saw that earlier this morning with all but one Republican voting to advance the package of the bill. And that comes even though fiscal hawks were initially concerned about that $3.4 trillion that would be added to the debt over the coming decade, according to updated projections from the Congressional Budget Office. Of course, Treasury Secretary Scott Bessent just joined CNBC a little bit ago and mimicked a lot of the criticism that we've heard from other Republicans when it comes to CBO projections. Listen to what he had to say.
If the bill, for some reason, hadn't passed, we would have had the biggest tax hike in history, and the CBO would say we're going to grow at 1.8%, and we are going to have the biggest tax cut in history, and the CBO is still saying we'll only grow at 1.8%.
In addition to the arguments like that, pointing to the fact that this bill could spur growth through, again, we were just talking about a couple of those business provisions that are going to be in there by keeping taxes lower for a number of Americans, by not having that spike at the end of the year. Republicans are still hoping that they can do other tax cuts throughout this year and maybe into next year. Guys?
All right, Emily Wilkins, thank you. With this bill likely to pass, Robert Frank has been digging through the 940 pages to see who could benefit and who might be hurt. Robert.
Morgan, it is a big bill, and about 80% of the benefits of that bill go to the top 10% of earners. Now, while the tax cuts themselves help all income groups, I want to be clear, almost everyone gets a tax cut from the tax portion of this. When you look at the cost cuts, mainly Medicare and Medicaid and SNAP, that more than offsets the benefits for those at the bottom. So the Yale Budget Lab looked at how each income group fares in this bill. So you combine the tax changes and all the transfers. The bottom 20% would see a decline in after-tax income of about $560 a year, or 2.3%. The middle would see a slight gain of $760 a year, or 1.5%. The top quintile gets a $6,000 gain in after-tax income, about 2.3%, and the top 1%, they make about $650,000 a year or more. They get a tax cut of about $32,000 a year. At the same time, some of the most expensive parts of this bill benefit those at the bottom. So, extending the standard deduction, that's $1.4 trillion. Child tax credit, about $800 billion. Eliminating taxes on tips and overtime, another $120 billion. Now, of course, the top 10% pays 70% of the taxes. So it just goes to show and comes by nature that any tax cuts are mainly going to help those who pay the most taxes, those at the top. Guys?
All right, Robert Frank with some light reading this week coming into the holiday. Appreciate it. Well, shares of Robinhood down slightly today, but still up 150% this year. But that wasn't enough to get the stock included in the S&P 500. We're going to tell you which stock was added instead.
And consumer discretionary, the worst performing sector so far this year. Will things turn around in the second half? Dana Telsey is about to join us to tell us which retailers retail should buy. Overtime's back in 2.
Is this how you're hoping to retire? Well, hope isn't a good retirement strategy.
¿Cómo ponen sus comerciales de retiro?
You've
¿No?
worked for
el sueño que todos quieren vivir o queremos vivir. BMNR Pro ya se vendió, $24 y me falta otra. Ah, sí. 14. Sell. $569. .65. 14.12. Ok. Ah, come on. Ah, ya quedó. Genial. Listo. ¿Qué más tenemos para el 3 de julio? A ver.
Project,
Yeah.
and then how you're generating smiles to the city of Buffalo with regard to that.
Yeah, so the Sinatra Snow, it's both of us. It's the partnership. That's the opportunity zone I mentioned.
Okay.
And when it comes to the smiles, it's making the people from our home smile because we're doing it, right? Like, if you had a big brother and your big brother came home and put up a treehouse in the backyard, and now the treehouse is available for everybody in the community, that's putting smiles on people's faces. We're taking our talents and we're not just running to South Beach. We're not just running to LA. We're not just going to all the overly super popular places. We're staying in Buffalo, and we're going to invest in Buffalo and make Buffalo as popular as the rest. Like, we have the border that's right there. We got Niagara Falls. We have everything that's right there. And just understanding that when you invest in your own backyard, it can still flourish as well as where the palm trees are every day.
I like that. And then, I mean, especially the point you made about the investments you're making in housing, because housing is a big issue in this country. There's just not enough housing, not enough inventory. So do you see yourself doing more on that?
Yes.
Okay.
Yes.
Okay.
I love the housing portion of it. I like
have you, especially because there's such a mix of data. We're just talking about this labor report. Overall, great, the market's up, but underneath the surface, for younger people, for discouraged workers who've been seeking employment and haven't been able to find it, it's not so great. And then we just had Max Levchin on from a firm yesterday saying, actually, the consumer looks pretty strong to him. All of that should bode well for the second half, but is there something that we're missing?
Overall, I think the second half of the year, some of it will be dictated by product newness, but really tariff implementation dictates the sentiment. And what we've been seeing is you've seen a trade down of the customer. When a Walmart talks that their biggest growth is coming from their highest income consumer, look what's changing out there. We're also seeing companies overall being more cautious. They're being more cautious in a couple ways. I think that we're going to see inventory caution. Goods had to be ordered for the holiday season already. We know what was happening with tariffs, and tariffs definitely dictate sentiment. So I think there are brand leaders that work, and where you're seeing newness drive demand, like at Birkenstock with the closed-toed shoes. Collaborations mean a lot. It'll be interesting to see on Thursday, Levi's and Nike's collaboration debuts. Everyone's getting a piece of Beyonce, and it is those unique items we can take a better price. But in my price tracker that we've been doing for 11 weeks now, 80 different items, we haven't seen much uptick in terms of prices. I'm waiting for the middle of July when back to school really takes hold.
So, Dana, is the strength with the big established brands and maybe the bigger footprint retailers, or is it with the up-and-comers and the boutique names?
It's about that. It's about value. It's about the off prices and the discounters, and it's about the brand leaders. So the brand leaders, like what you're seeing out of Birkenstock, what you're seeing, Levi's is doing well too from everything that we're seeing. Also, it's brand leaders and it's value. And the up and coming, yes, you have some up and coming because you have some revivals going on. Look at Wolverine Worldwide with Saucony up 30%. That was definitely encouraging, and the continuation of strength at Ralph Lauren and Coach.
I want to go back to trade deals because Vietnam to me was particularly interesting. A, you got a 20% tariff on exports out of Vietnam into the U.S. B, you have this transshipment tariff, which is 40% on goods that are coming through Vietnam from third countries, namely, arguably squarely aimed at China. And yet we saw Nike, Lululemon, Crocs, On Holdings, some of these names that have big supply chains in Vietnam actually move higher on the news. How does that set us up for other trade talks and how to think about, as an investor, some of these supply chain dynamics?
The supply chain dynamics are very challenging, and it's going to be about what does inventory growth mean relative to sales. We're seeing freight expense continue to be a headwind, and overall the price increases that we're hearing that are yet to come are going to be in the...
Nike en los $76 no está mal. Recuerden que la semana pasada estaba en los 57, no, 65 69 la semana pasada Nike. Entonces ha tenido un buen impacto, ha sido bueno. Vean, After, cerramos en 135 y está en 141, pero esta cosa da miedo. O sea, da miedo en el sentido de que Ethereum ya tiene un impulso para subir y esta cosa va a subir más todavía. Entonces va a ser una locura. ¿Qué más tenemos? ¡Oh, me quiero estirar! ¡Ay, me duele todo el cuerpo de hacer ejercicio! GoDaddy. Ok, a ver, ya estoy casi por terminar otra. Yo creo que voy a contar el tiempo del reloj, una media hora y ya acabo. Ya para desconectarnos hoy. Vamos a poner
All right, here, guy. We're all just going to do this together. You're going to put a hotel. We're going to put a hotel, and so it's going to be this. Miami, all right, we're going to take care of this one area called Wynwood, and we're going to make this great, you know? Cool. Let's take this one area in Buffalo and make it great. So when people come to town, which they're going to come to town, this is something that they will see, and it's a part of their experience of coming in and out of Buffalo.
Hope to create jobs through all the work that you're doing?
It will create jobs. And that is one of the most important things because it will take people from this to this. And I've learned that from my owner, Pagula. He said that that's one of the best. He said that that's one of the best things with everything that he does is creating jobs, right? And from what he's able to do, he's created so many little branches, right? Like he's created Dion, right? And now with Dion, I have all these branches that are part of me. Him and his daughter. He created the daughter. His daughter's a tennis player. She has branched off with all these little things. Josh, all this little thing, and all those branches are a part of him. And now him.
Well, I would argue he invested in you, not created you.
Created though. Like he was able to say we want Dion Dawkins. That's a creation.
Okay.
But that's a investment, but it's a creation too though.
Okay.
Like he has to be able to, I mean, yeah, it's an investment, but I look at it as creation. Like without him, I'm not created like that.
Can I do a rapid fire round?
Please,
with you?
Let's do it.
Okay. We know Buffalo is home to wings, special wings.
Yeah.
So we'll start out with this as our rapid fire round. Blue cheese or ranch?
Blue cheese.
Blue cheese. Okay. So I heard that you would say that.
Yes.
Favorite sport besides football?
Favorite sport? Let's say.
Is it?
I don't think drifting. Well, drifting is a sport, but it's like if we're talking about like Olympics sports, like Olympic, I'd probably say swimming.
Swimming.
Swimming is pretty cool.
Doesn't have to be Olympic. I thought you were going to go with baseball because of the Yankees.
Baseball is cool.
I know you're a Yankees fan.
Baseball is super dope.
Okay, favorite food?
Oh, I've enjoyed a nice Jersey bagel.
A Jersey bagel, okay.
A New Jersey bagel.
Favorite wing place since we're taking it back to Buffalo here?
Bar-Bill Tavern.
Okay, I heard you were going to say that.
Bar-Bill.
A fan told me you were going to say that. Favorite Buffalo tradition?
Favorite Buffalo tradition is probably jumping through tables.
Jumping through tables. I'll have to learn more about that one later.
And wearing the zebra striped pants.
Okay. Favorite way to relax or rest when you're not playing football?
Favorite way to relax? Well, I watch movies and I play music. I have a DJ set and I will DJ and play with the music.
Favorite movie?
Pirates of the Caribbean.
Ooh, Pirates of the Caribbean. Okay,
yes.
All right. If you were not playing football, what career would you pick?
I would be a superstar movie actress.
Actor. Unless you want to be an actress.
I would be an actor.
2025.
Come on now. I'll be a superstar movie actor. I would try my best, and I would be in movies, starring in movies with Johnny Depp.
Okay.
And Pirates of the Caribbean.
Oh, because this all brings it back to Pirates of the Caribbean.
Oh man.
Okay. And is there anything that that Google does not know about you, or Wikipedia, that you can share right now that would be, kind of a fun fact?
Fun fact about Dion is you would think, I don't know, if I were to ask you what is my favorite animal, you would say what?
A lion?
A duck.
My
favorite animal is a duck. And I have ducks tattooed on my stomach, and I am a duck. I like ducks. I've been gifted a duck when I was a kid, and a stuffed animal duck, and ever since then I found the love of ducks because they're very calm on the surface and their feet are going extremely fast underneath, and I think that that's a beautiful thing that you can do that.
Okay, and final bonus question then. Favorite season? I think I know the answer to this one.
Favorite season, like
of fall, winter, spring, summer.
The U.S. economy has been such a different story from what's happening elsewhere in the globe, not just during COVID and immediately after, but continuing to be so. I know there's some voices who are pointing out, hey, around the world, there are all these rate cuts. Why not here in the U.S. yet? With this labor report that we just got, do you expect to see a further bifurcation between U.S. and global growth?
I don't know how much we want to extrapolate the insides of today's jobs report and immediately say, hey, we're off to the races and unemployment's going to keep going down. I think what it mostly shows is steadiness. So steady U.S. economy, basically pretty decently matched between labor supply and demand. Both are constrained here a little bit. But in general, I do agree that it's not telling us this is an economy in need of particular acute help from lower interest rates. We've kind of waxed and waned. You have most other central banks. They did have a bit of a growth shock with the tariffs. And then also, they are more disinflationary, their economies, and they have many central banks that are only focused on inflation. So, I get the differentials here. We'll see if that adjusts over time. The market seems to think it probably will over the next few quarters.
Yeah, we'll see what Loretta Messer has to say about this, too. And we'll see you a little bit later in the show, Mike Santoli. Yep. Thank you. It's time now for a CNBC News Update with Courtney Reagan. Hi, Court.
Hi, Morgan. Well, the Kremlin said Russian President Vladimir Putin told President Trump in a phone call this morning that he won't back down from the country's goals in Ukraine, but is still interested in negotiating a settlement to the conflict. The aide added the two leaders did not discuss President Trump's decision to stop some weapons deliveries to Ukraine earlier this week. The U.S. will reportedly hold nuclear talks with Iran in Norway's capital next week. According to Axios, White House envoy Steve Witkoff will meet with Iran's foreign minister in Oslo in the first direct talks since the U.S. and Israel attacked the country's nuclear facilities. And billionaire investor Bill Ackman is backing Eric Adams in New York City's mayoral race. The former Democrat, who now supports President Trump, posted on X calling for Andrew Cuomo to step aside, saying that Adams had the, quote, energy and clarity to take on Zohran Mamdani in November. Ackman had tried to find another viable candidate to join the race before the election, but now says it is impossible to add a new name to the ballot. This race certainly getting the nation's attention. John, back over to you.
For sure. Courtney, thanks. Coming up, President Trump continuing to put pressure on Fed Chair Jay Powell. Last night, once again, calling for his resignation. Up next, we'll ask former Cleveland Fed President Loretta Messer about the criticism of Powell. Stay with us.
I like things personalized, like my coffee. So when my doctor prescribed Vyvgart Hytrulo self-injection for my generalized myasthenia gravis, we personalized my treatment goals.
Vyvgart Hytrulo can improve daily abilities and reduce muscle weakness.
It's my treatment, my way. Vyvgart Hytrulo for Weekend Away Steve. It's travel ready and can go where I go.
Self-injection fits my plans.
Do not.
Y al rato baneado por el
family office, and I thought I'd only go back to work if I could do three things: work with young people, learn something new, and have something to offer. And even back then, I sensed that this crypto thing was going to be much bigger than most people thought. And a lot of young people. I was learning venture investing. And we thought we'd set up Galaxy as a bridge between kind of the crazy Wild West crypto world and the institution world that I'd come from, both Goldman Sachs and Fortress, really, kind of core institutions. And so that's what we did. And I had this catchphrase, the herd is coming, institutions are coming. And I was way early. It took a long time for the institutions to come. But we're at this moment, literally, where institutions are here. The new administration has done a 180 on where the old administration was for crypto. And so it's unleashing lots of pent-up creativity, lots of pent-up demand, lots of pent-up energy. And we're going to see the financial architecture, both of the U.S. and abroad, and quite frankly, the consumer architecture, infrastructure change really quickly.
I think about that. I saw something when you said when crypto was selling off in a big way, you thought maybe people might lose interest, and that's when you really knew the herd was coming.
Listo,
because they were still buying.
Pues a Kramer no lo veo
este
de aquí, pero obviamente no es Kramer.
Right?
Pero pues ya, al rato vamos a hacer ejercicio. A ir a comer al Penguin
98%. You can't understand what 98% basically just disappeared.
Y ver a un
Bitcoin didn't do as bad as the rest, but most of the other coins.
Mañana no hay mercado, así que seguramente habrá un directo ligero, registros nada más. Y el lunes pues ya todo normal. Así que va a ser Puente Rico otra vez, porque fue el 29 de mayo, fue el día inhábil que tuvimos en Estados Unidos. Pues ya estamos. Así que los voy a dejar, amigos. Chao. Gracias por estar aquí.